What is interim budget? What is vote on account? Today, let's try to understand about budget and the types of budget. Welcome back to our channel, Chronicles of Current Affairs. On 1st of Feb, Finance Minister Srimati Nirmala Sitharaman presented an interim budget for the year 2024. Many of us every year have kept hearing budget has been presented and there have been so many tax benefits, schemes being announced by those in favor of government and opposition keeps saying nothing in it for poor or middle class, etc. etc. But we never thought of understanding what is the meaning of budget and what is it trying to achieve. A budget is a spending plan based on income and expenses. In other words, it is an estimate of how much money you will make and spend over a certain period of time, such as a month or a year. Through the budget, new schemes may be launched, income tax slab may be changed, for ease of doing business some taxes may be reduced or abolished. It may provide some push to certain industry or service by allocating more money in the budget. Are the provisions of the budget documented in Constitution? Yes, we have mainly 3 articles which act as the base of the budget. First one being Article 112 of Indian Constitution. It states that the President shall, in respect of every financial year, cause to be laid before both the Houses of Parliament a statement of the estimated receipt and expenditure of the Government of India for that year. But note that in Constitution of India there is no mention of the word budget. Rather, it is called Annual Financial Statement. Second one being Article 110 of Indian Constitution. It tries to define the definition of money bill. Since budget deals with receipts and spending of money, it is important to understand provisions of money bill. A bill shall be deemed to be a money bill if it contains only provisions dealing with all or any of the following matters: the imposition, abolition, remission, alteration, or regulation of any tax, the regulation of borrowing of money, the custody of the consolidated fund or the contingency fund of India, the payment of money into or the withdrawal of money from any such fund. If any question arises whether a bill is a money bill or not, the decision of the Speaker of the Lok Sabha thereon shall be final. Third one being Article 114 of Indian Constitution. Article 114, also known as the Appropriation Bill, gives power to the government to withdraw funds from the Consolidated Fund of India for meeting the expenditure during the financial year. As per Article 114 of the Constitution, the government can withdraw money from the Consolidated Fund only after receiving approval from Parliament. We just saw that there are different types of funds which government handles to manage its expenditures and receipts. Let us have a look at them in detail. There are 3 types of funds which Government of India maintains, namely Consolidated Fund of India, Contingency Fund of India, and Public Account of India. Their source of income are tax collected by the government, loan borrowed, interest or principal received on the loans for Consolidated Fund of India, fixed corpus of 500 crores for Contingency Fund of India, bank savings account of the various ministries or departments, National Small Saving Funds, National Investment Fund, Provident Fund, Postal Insurance, etc. for public account. Government of India manages its spendings also via these funds, but each fund has its own criteria for spending. Via Consolidated Fund of India, government manages most of its expenditures. Via Contingency Fund of India, government manages unforeseen situations like natural calamities. The Public Account of India accounts for flow of those transactions where the government is merely acting as a banker. Some example of these are provident funds, small savings, and so on. Government requires prior permission of the Parliament to withdraw money from Consolidated Fund of India. For Contingency Fund, no prior permission is required, but needs approval after spending. The expenditure from the public accounts is not required to be approved by the Parliament because of the returning nature of fund. Article 266, Section 1 of Indian Constitution defines the provision of Consolidated Fund of India. Article 267, Section 1 defines the provision of Contingency Fund of India. And Article 266 Section 2 defines the provision of Public Account of India. Recently, Finance Minister Nirmala Sitharaman announced that 2024 budget will be only vote on account budget, not a full budget. But what is vote on account budget? Whenever we are approaching a general election, interim budget is represented by a government instead of a full budget. Since in May, term of parliament is going to be over, there will be elections held most probably in April and May. So, via interim budget, vote on account is passed for 2024. Wait, what? We just said it is a vote on account budget and now we are saying interim budget. Oh, still not clear, right? Let us see difference one by one. Vote on account passed to solve the cash problem, while Interim budget passed by an outgoing government. Vote on account deals only with the expenditure permissions, whereas interim budget includes annual financial statement and money bill or appropriation bill. Vote on account is valid 2 to 4 months or till appropriation bill is passed. But interim budget valid for entire year from 1st April till 31st of March. Vote on account until 2017 it was presented every year. An interim budget is presented during election year or extreme situations, but new government can change this. Now I hope it is clear. But wait, I'm sure you're still thinking why am I saying until 2017? Let's go back few years in timeline to 2017. Until 2016, budget was presented on the last working day of February by the Finance Minister in Parliament. Annual financial statement goes through the scrutiny by the department-related parliamentary standing committees, which examine the individual demands for grants and give a report to Parliament. Then Parliament would vote and pass the appropriation bill. Hence, even though the budget was presented on Feb 28th or 29th, it used to be passed only by April end or early May. Individuals and firms were unable to do tax planning, investments, and purchase decisions given the uncertainty over the provisions of the Finance Act and hence was against the principle of ease of doing business. It used to take the month of June for money to reach the implementing agencies by the time monsoons set in. During monsoons, big projects like road constructions can't be taken up. Till late September, nothing happens on ground, though the financial year starts from April. To accommodate this, vote on account had to be passed until the appropriation bill is passed. Vote on account in turn has limitations, and money for big projects cannot be procured with it. It allows money to be drawn for small things like paying salaries or pensions. Because of the preponement of date of presentation of the budget, entire budget exercise gets over by March 31st. There will be no need for a vote on account and government can straight away start implementing projects from April 1st. I'm sure now you are clear. Until 2018, as a part of tradition, Finance Minister carried the budget in a leather briefcase. The tradition was established by the first Finance Minister of India, R.K. Shanmugam Chet. Until the year 1919, the Union budget was announced at 5 p.m. on the last working day of the month of February. Actual agenda behind this tradition was that it gives Britishers the time of 11:30 a.m., a relaxed time at their location. It was Yashwant Sinha, the then Finance Minister of India in the NDA government under Prime Minister Atal Bihari Vajpayee, who changed the ritual by announcing the 1999 Union budget at 11 a.m. Also, again in 2017, departing from the colonial era tradition of presenting the Union budget on the last working day of February, the then Minister of Finance Arun Jaitley announced that it will be now presented on 1st of February. Separate budget for railway and Union budget was also abolished in 2017. The printing of budget documents starts roughly 1 week ahead of presenting in the parliament with a customary halwa ceremony in which halwa is prepared in large quantities and served to the officers and support staff involved. They remain isolated and stay in the North Block office until the budget is presented. The halwa is served by the finance minister. This ceremony is performed as a part of the Indian tradition of having something sweet before starting an important work. As per the established tradition, the finance minister meets the president at the Rashtrapati Bhavan to get assent from president before heading to the parliament to present the union budget. A meeting of union cabinet is held at 10 a.m. on February 1st. After getting the nod from the cabinet, finance minister presents the union budget in Parliament of India. On 5th of July 2019, Nirmala Sitharaman broke the above tradition by carrying the budget in a Bahi Khata. On 1st February 2021, Finance Minister Nirmala Sitharaman presented the first paperless budget. She took a digital tablet wrapped in a traditional Bahi Khata style pouch. The budget is divided into two parts. One is revenue and the other one is capital. Now, revenue is divided into two parts. One is receipt and expenditure. The receipt is further divided into tax and non-tax. Under tax, there are two types. Direct tax, such as income tax, corporate tax, security transaction tax, and capital gains tax. Under indirect tax, we have custom duty, excise tax, and service tax. And under non-taxation part, we have selling of goods and services, dividend and profit, interest, and grants received by other countries and entities. Under expenditure part, we have interest paid, subsidies, defense, salary and pension, and grants given to other countries. Now let's look at the capital part of the budget. It is divided into two parts, receipt and expenditure. Receipt is further divided into two parts, debt and non-debt. Under debt, we have internal and external debts. Under non-debt, we have loan recovered and disinvestment. Under expenditures, we have two parts. One is loan given and other one is capital goods. Now let's look at the highlights of 2024 budget. Under income tax, there is no change. 40,000 normal rail bogies will be converted to Vande Bharat to enhance the safety, convenience and comfort of passengers. Lakpati Didi scheme was launched in 2023 to empower women self-help groups in villages. Now it has been decided to enhance the target for Lakpati Didi from 2 crore to 3 crore. Through rooftop solarization, 10 million households will be enabled to obtain up to 300 units of free electricity every month. Government aims to meet the commitment to net zero by 2070. The government will expand and strengthen the EV ecosystem by supporting the manufacturing and charging infrastructure. The FDI inflow during 2014 to 2023 was 596 billion, marking a golden era. This is twice the inflow during 2005 to 2014. Ayushman Bharat cover will be extended to all Anganwadi and Asha workers. Despite the challenges due to COVID, implementation of PM Awas Yojana continued and the center is close to achieve the target of 3 crore houses. 2 crore more houses will be taken up in the next 5 years to meet the requirement arising from the increase in the number of families. Fiscal deficit for the financial year 2025 is targeted at 5.1% of GDP. That's all on the topic of budget. If you like the video, please like, share and subscribe. Thank you.